Welcome to the 2022 Economic and Preparation Channel. I'm your host, Tony. Thank you for joining me once again on this quick live stream here, of today's economic events that have been impacting us here today on June 8th, 2022, Wednesday, hump day. The Dow Jones continues to drop today after being on a winning streak for 2 days. And as inflation concerns persist, according to Yahoo Finance, Dow Jones was down about 269, 270 points on the day. The S&P 500 fell over 1% today, and the Dow and the S&P 500 both lost about 0.07%. And so all major averages had kicked off with these record gains, and now we see these losses coming into effect as they begin to prorate the losses as oil reaches above $122 a barrel and continuing. Many places around the country are already seeing gas at $4.99, $5 basically a gallon for regular. Diesel's already at $6.39 or higher in a lot of U.S. dollars and U.S. dollars in a lot of states already out west and in the south and northeast and et cetera in the Midwest. And so this is really putting a lot of pressure, on the economy, a lot of pressure on the world economy. And so this is going to continue, folks. Remember how they said that things were transitory? Well, this doesn't look transitory to me. We haven't reached the bottom in this stock market yet. And the thing that's going to be concerning is that the Fed meeting coming up here next weekend, next Wednesday, I believe, Fed's Muster chairman, Cleveland Fed President Loretta Muster, says that she doesn't see enough, quote, support evidence that inflation has peaked. I totally agree with her on that point, and she's on board for multiple interest rate increases. You remember 2 videos ago, I did say that they were going to do multiple increases, and that the half point rate hikes are needed. And I think personally, a full point rate hike is needed at this point because we're so far behind. And so what's going to happen is they're going to continue with these half point basis hikes. It's not going to do anything. And we're going to see the full magnitude of inflation is not going to be felt until the fall. This fall, coming after September, October, November, we're going to feel the full magnitude of all the money printing, the credit market, the housing market, the derivative bond market. These markets are going to be coming due. The roosters are going to be coming due coming into 2023. And this is what's going to be so interesting about this type of economy that we're in, guys. And so we have to be cognizant. We have to be aware of the magnitude of our actions. And so when you look at inflation, real inflation is at 16.9%. And victory on inflation is not yet, because we know that this is going to be a deep and long recession. Unlike 2008, 2009, this next recession, even depression, is going to last 10 to 12 years at a minimum, because the economy is going through a transformation. As you know, the production was shipped overseas. We've been a service-based economy for the last 35 years. And that means that we're going to be the ones bearing the brunt of high prices, less service, less quality of service, and less jobs, less high-paying jobs. MarketWatch.com today: as Biden fights inflation, economist warns his weapons for this battle, quote, look extremely limited. That's to say the least. As you know, he still has another 2.5 years left, almost 3 years left on his contract here as a president. To finish the job and to make this look pretty before the midterms, but it's not going to happen. Inflation is going to be double digit before the midterms. It's going to be above 10%, as you know. And this is just not on food, energy, and gas and all that cost. This is affecting the normal cost of everyday supplies, because a lot of our stuff are shipped by diesel trucks, and those trucks have to get the things there, the supplies there. How can they do that when everything is so high and expensive? And this is not just a U.S. problem, but the U.S. is leading the way. This is a worldwide problem, as far as the inflation concern is here, guys. The prices are extremely high worldwide, and for food, goods, and services, and the things of that nature. And so we have to look at this as being, this is going to be a marathon, not a sprint. This is the thing that we have to look at. This is going to take decades to correct, unfortunately. And there's no easy solution, but we can help get prepared to help mitigate some of the damages that we're going to be seeing here in this economy as Biden attempts to fight inflation. And this is going to be detrimental, guys. Like I said, he can only start printing money and do more packages. The president is just a piece, but he doesn't control the gas prices. He doesn't control, the food prices and all of this. And now with the burden of student loan repayments going up for 48 million low-income households, he wants to make internet service free and do the student loan repayments. Now, we didn't get the infrastructure bill. Well, we got some of the infrastructure bill passed, but we didn't get the main part of the $2 trillion infrastructure bill passed, or $1.9 trillion infrastructure passed. So, can you imagine the inflation levels that we're gonna have from not only that, but just from the money given to overseas with to the conflict that's going on in Ukraine? We've already spent 38448 packages there, over $2 trillion there, plus what's going on our southern border, the money that we are spending to take care of our migrant workers and different people down on the southern border, and to pay those border patrol, different facility, all kind of agencies down there. It's just a ton of money that's going to be going to all of these costs. And so that means inflation is here to stay, ladies and gentlemen. It's here to stay throughout this year. It's here to stay throughout next year, and basically throughout the rest of President Biden's term. And so this is going to be extremely painful for companies, small businesses, for individuals. And the good news is that the economy has held on for this long. We still have somewhat of an economy. We still have people with jobs. We still have people with food and housing. God bless, America. Things are still going, but they're just going to be extremely limited here in terms of range of things that we can do. And that's just going to be the pain of things. That's just going to be the brux of things. That this is going to make things that much more difficult, guys. So this is what we're going to be dealing with. And guys, did you see the latest thing? It's like when you go to the gas station every day, any gas station, the price of gas is jumping literally 10 to 20 cents a day. Like, I just went to the gas station one day. It said it was I think it was $4.79. The next day I go there, or next couple of hours I go there, it's $4.99. And some stations are already at $5.15, $5.20 a gallon. These are not even no name stations. A quick pick, a super quick, or whatever you want to call it. These are no name stations in the middle of nowhere, and they're charging these exorbitant rates just overnight. And so this tells you the danger of forgetting your supplies. You must be able to get your supplies. You must be able to get all of your things that you need immediately, those supplies available while you can, because guys, this thing is not going away. This inflation is not going away. The jobs are going to be disappearing. Companies are going to have to cut. They're going to be cutting corners any and every way that they can, because either what that means laying off employees, whether that means cutting back on shipping with the supply trucks and everything. So you can imagine the effect that this economy has. And even President Biden himself has admitted that there's going to be some pain in this economy before things get better. And so we know that this is coming. The economic outlook is essentially they're putting band-aids on a problem that needs to be fixed, that needs to have surgery to root this economy out right now. So guys, 10 states now have an average gallon of gas that costs more than $5 a gallon. I don't think I need to tell anybody. I don't think you need a PhD to figure out that gas prices are going up, and they will continue to rise because the conflict is not over. Not just over in Ukraine. The conflict is not over in all these other countries that are getting off the petrodollar. We have people that other countries that are getting off the petrodollar, like what is it? Oh, we have countries like Saudi Arabia. Other countries are getting off the petrodollar, and so gas is going to continue to be raised up to $10 a gallon here, as you can see. So we have many states that are continuing to raise 725 gallons, over 725 a gallon in California. We have prices continuing to rise. This is not adjusting for inflation here. We have Nevada gas is at $5.49 a gallon. Hawaii, Oregon, Washington, even in D.C. and other areas, gas is over $5 a gallon this week. Massachusetts and Pennsylvania, gas is at $4.95, $4.96 a gallon. And so this is even with President Biden releasing the strategic petroleum reserves and other things. Gas still continues to go up, and so and then global food prices are reaching at an all-time high. Global food prices are at an all-time high. The United Nations announced Friday that its index of global food prices increased 12.6% in March from the month before. It is the highest it's been since the UN started tracking prices more than 3 decades ago. So as you can see, prices are continuing to go up for all of consumer goods here, and it's just not going to be a good thing to go. When you have food, gas, and consumer inputs going up, things are just not going to be good for most people around here in America. And so what we have to continue to do is prepare in every way that we can. You want to prepare mentally, spiritually, physically, and emotionally here for these prices to continue to go up. Now, I wanted to show you also, we have the consumer debt. Consumer debt is reaching an all-time high. Now, if you look at the total debt by generation, we have the Generation X, those ages 40 to 55, is leading the way with debt at 135,841. We had the baby boomers right behind at 96,000. The silent generation, the 75 and above, those who were, savers, and the great saver generation, and the great, workers of our economy, and they're down at 40,925. They had the least debt. The millennials, 24 to 39, they have 78,000, and the core Gen Z, or younger, is just getting out of college or just starting college at 9,593. A lot of that's probably just credit card debt. But you look at the total debt by income level, by education level, you can see that the majority of people that had the debt is the doctoral, the master's, and the bachelor students. So those students who went to college would have either got a bachelor's, a master's, or a doctorate degree. Those people are in a lot of debt, at least 50K or more of school debt loans, student loans. Now, those who did a trade school or associate degree, they have 40, 30K. That's a little bit more manageable than those of us that went to a 4-year or a master's or a doctoral program and got 100K or more debt. Now, that's manageable if you're in some type of public service loan forgiveness or some type of loan forgiveness program, or in a working program, Peace Corps or something like that, then maybe you can get a chance. Now, all of this debt information, this is what's going to really kill the U.S. economy. This debt has to be paid back or has to be either papered over. And I think they're going the route of a hyperinflation to paper over the debt and to, cause that. That's the route that I think that they're going with the economy. So if hyperinflation persists, you want to be, I'm not a financial planner, once again, to put that disclaimer, but you want to be into real estate, into hard, tangible assets, land, gold, silver, cryptos, cryptos maybe to a lesser extent, but you want to be in hard tangible assets, T-bonds, treasury bonds, things of that nature. Okay, I'm not a financial planner, but I'm just telling you those are things you want to be into as we go into this hyperinflated economy. And you want to get barterable items that you can trade amongst your neighbors, your friends, or family, and they'll be willing to pay top dollar because you can't get it in any of the hardware stores. Eventually, you're not going to be able to get it in any of the stores that we go to on a daily basis, like a Walmart, or Target, or Kroger's, or you name it. So that's the kind of things that you want to be in at this time. So I just want to give a brief recap here live on the live show economic. Hopefully next time I'm going to be, guys, you tell me when you want the next real live, when I do a face-to-face live. I'm away from my studio, but I want to do a real face-to-face live this month, and so you tell me what days work best for you. Is it a Monday, a Wednesday, a Friday, or a weekend, a Saturday or Sunday night, when I can have all of my all of my crew, all of my community in here. Let me know in the comments where we can do a face-to-face live show where everybody can be here together, or we all can be together face-to-face. So I just did this as like a trial run to see, you just let me know in the comments when you would prefer to have a live show that will work best with all the different time zones we may have here. For those on the West Coast or on the East Coast, or if you're in Canada or in some other place, let me know what will work best for you for a face-to-face live show and during that time. So thank you very much for joining me on this brief overcap today, and I look forward to seeing you in the next episode of Preach to Me. Thank you.